Alrighty, traders. Hello, everybody. Just going to do another little live stream today, as I'm just opening up the charts myself to see what's going on in the markets right now. So I thought I'd bring on the live stream again and say, hey, what's up? As I'm looking at the live market this morning, for me anyway. A lot of big things are happening, guys. A lot of things are happening in the markets right now. And there's going to be a big move too. If you guys saw some of my videos I put up yesterday, you'll notice the whole bond market starting to turn. That's potentially a signal of what's going to come soon. And the stock market as well too. Stock market right now as well is, I think we're about to see an incredible move as well. I think we're on the verge of something really, really big. And just like my thumbnail that I put for this live stream today, pain is coming for the shorts. The thing that I do see when you're looking at, say, for example, this is the war sheet cheat sheet here. The interesting thing about this sentiment around the markets right now, it's always interesting, because we're so high in the stock market. And I think that's what a lot of people are looking at. But when you look at the sentiment, it's down to like, Philip, my man, what you want to do is you want to look at the overall big picture, man, not just one day. You look at the overall big picture. One day doesn't mean anything in the markets. You want to be looking at just what the overall major moves are doing, and that tells you the real story, not one day. The short-term movement, volatility, just like you're seeing in the stock market, can really fake you out. It goes down for a couple of days, fakes you out, and then continues back up. And it goes down for a couple, like that sort of short-term movement can really fake you out and get you thinking, get you on that wrong side. So I'll talk about that in just a minute. But it's an overall basis, right? Markets don't just generally just collapse or go straight down or go straight up. They'll go up for a bit, they'll come back down for a bit, and like they make their overall movements towards that there. You just woke up? No, I didn't just wake up. I've been up for a while. Got up and did a bit of stretching and all that sort of stuff before I looked at the market. I don't just get out of bed and come straight to the market. I get a bit of warm up first. But the interesting thing about the psychology of the war sheet cheat sheet, I look at the sentiment, right? And we know the reason why silver and gold did what they did to come back to that equilibrium is because the euphoria was just out of control. And that's what happens there. One of the things I love about investing in the bond market is the bond market is down the bottom here. And this is always the hard thing, right? It's like when there's a lot of sentiment around one market saying no, you want to go with that, right? Because you want to go with what you think the herd is. And it's an interesting thing, right? The more success you get in the markets, you realize that going against this overall herd, this noise that comes around with any particular market is generally the right thing to do. And whenever you see the noise on one side, you start to see what's going on. And that's where, like, for example, silver and gold and the mining sector, and even the stock market right now. Like, I look at the stock market and yeah, we're at highs. We're at 7,000, basically just under 7,000 on the S&P. But I would say we're around about this disbelief here, this disbelief and this hope here. Maybe not even belief. People, it's like this whole disbelief thing here. I'm not even getting hope out of the stock market. Like there's still so much. So I'm just looking at where the sentiment is, and because the sentiment really drives the market. You get too much euphoria, and then you get too much. And as you know, look at the last 5 years, where have been the best buying opportunities when the market's been down here, right? Anger, scared, depression, and then the market bounces. So if you do need some help, guys, I'm giving away basically a free package. This is the X Factor book here at johnsfreegift.com. So if you're looking to need some help, especially around the psychology stuff, and then also I give my trading system away for free. You got like a free course in there. It's got like 8 videos long. There's a whole bunch of stuff I give away for free. So just go get access to that. It's free. And if you'd like to get more hand-holding coaching, my coaching program is closed right now, but you still can book a free call with me at getjohnshelp.com. But the coaching program is closed, but if you want some help, I'll see what I can do to help out. So let me go to the actual markets here now. So, Philip, as you can see, as an example, man, like one of the biggest mistakes a lot of people make is they might look at today, right? So they see what the stock market's doing today as an example. And then they completely miss the big story, because as you can see, all these short-term little drops here have been little fake outs, and the big story has come from these big long-term weekly charts. So you said the 10-year backed up for a bit, but it came back. Yeah, but it's the overall picture, right? If you actually look at what the overall market is doing, not just today, we're actually still coming down here. So I wouldn't really call that, well, actually maybe. You said we had a head fake that sent the 10-year back up for a bit. I'm not sure what a head fake would represent though, but the way that I see this on an overall picture is what we see here. Now, if I bring this up to here, let's go to yeah, so it's again this one down day, the overall movement is still coming down here. So one movement doesn't mean anything. If you watch my videos, Philip, on what I talked about with the bond market and everything like that, it's an overall movement, right? This is where like a lot of traders get into issues and problems, because they're seeing what's happening on one day, and they're so emotionally reactive to one day. And from that, then their emotions are getting swayed all over the place, especially like in the stock market example. So just because the market goes out one day doesn't mean anything really. This is the big long-term picture. And what I'm talking about specifically is this. If I show you this chart here, this is the weekly chart. And the most important thing to us as traders, is whatever the relevant recent trend is. So if I draw the relevant recent trend and I actually draw over this, I'm going to make this, let's make this blue so I can see. If I show you what the actual trend is, not the legs, but the trend, you'll be able to see what's really going on here. So that was the low, that was the high. Then we had another down move from here, from there. So then, as you can see, this is an overall down leg. But this is a weekly chart here. So that was up for a couple of weeks, down for a couple of weeks. Right? And then guess what? Now we've come back up here, right? And now we've come back up here for this overall leg. This is where most people miss, right? But look what's happening here overall. We're actually in a downward sloping, we're in this downward trending phase now. It's in a downward overall leg there. So Philip, if you're still around, man, as you can see here, but this is weekly charts, right? Weekly charts have volatility. Sorry, daily charts will have volatility, but the big picture is always going to tell you what's going on. So just because we get a movement up for a couple of months does not mean that the trend is completely over. Because then what ends up happening, then the market then rolls over. And then this big weekly trend, and that's what markets do. So the daily chart, that one down day doesn't really mean anything, because as you can see, we're in this downward phase through here. And that's the most important part. Plus also, there's a bit of a technique we can use here, but this up leg through here, if you actually look at the legs, meaning I'll draw over these buying legs here. You'll notice that was a buying leg through there. This is something here, it's really interesting, right? So, and that was another buying leg there. And then that was another buying leg there. And here's the interesting thing. I want to teach you a bit of a deeper psychology about the actual chart reading techniques. Whenever we have the markets doing these, and they could see it was just strong all the way up, right? Look, see strong. Look how strong those legs were, these buying legs in the market. But notice here, right? Notice that we actually got this leg here is so much weaker. The angle is so much more flatter, if you can see that. This one here is more vertical up. And then this one here is much more slower on it's flattening out a lot more. The overall leg to the upside. That means that the buyers are losing strength. Look, even though this is an up leg here, it's so much weaker compared to the previous legs here. It's showing you that the buyers are losing a lot of strength here. So it's just not one down day. This is where a lot of traders, they look at the chart. That's where, like, for me, I'm not really concerned about one day. Like, I don't open up the chart, go, oh my goodness, look what happened today. It's like, it's still the overall big picture that I'm concerned about. And then now look what's happening. We had this high up here. And now look what's happening now. We're developing this now another lower high. But within that lower high, we get all this volatility. So the overall picture, there's an overall momentum of the markets that's happening. But as you can see, now I'm going into the daily charts. You can see, look how volatile these daily charts are. It goes up for a week and then comes down and goes up, comes down. But the overall picture, this is the overall big long-term momentum's in place. And that's where looking at short-term only, like even like a daily chart, is not, it's not a good thing. Because then the market short-term shakes you out. And then you're like, what the hell happened? I'm curious as to why you are trading a leveraged TLT ETF. Because I want to, and because it's just a trading opportunity. And because I'm okay with the risk, and that means I'm okay with this having not been right and losing it, having a losing trade. It's just one of those trades. That's all. I'm myself happy to do it myself. If I see the bond market going up, which I do, TMF's going to go up even a bit more. So the leverage there is going to be a lot more. That's all. Remember, it's just a position, guys. It's not the end of the world. It's not 100% of my account. It's just a portion, a little small portion of my account. We don't need to get married to one particular position here. I'm not really... Yeah, look at TMF. Eh? Interesting, the angle of TMF, actually. We're still not there yet 100% because the TLT, which is the main market, we still need this thing to hold and start to break above. But if we can break above this resistance line here, then this is the squeezing up pattern that we'll start to see. Then that we'll start to see this if we break above here and we start to get like a 90 print on TLT, then that should now start to make its way up towards 100 there on the short-term level there. XLE, right? So this is where the art of trading, guys, is always trying to see the big picture. If we're focusing so much on short term only, well, there's actually a lot that goes into trading. That's why most people don't make money from trading. There's actually a lot that goes into trading. It's not just that, right? It's most people trade the markets, and I'm finding that more and more lately. Anyway, they're not even having any sort of trading setup that they trade. They're just like trading anything. And they wonder why they're not making money. Oh, I can trade this. I could trade X. Second question is, when you talk about being at the top of a current market, you don't talk about trading the inverse ETF. JK. Because I don't. I'm not sure what you want from me on that there, but I just, there's no need. If I talk about the stock market right now as an example, which, by the way, did you guys see? I'm not sure if you guys saw the video yesterday, but this is where we are right now on the big picture. And Philip, mate, if you're still around, this is an example of the weekly chart, right? Look at this weekly chart, still trending up nicely, but within this trend becomes a lot of volatility on the daily chart. But the aura of momentum is still very strong to the upside for the last 12 months. So that big long-term trend is still there. Those short-term little drops that shakes people out. And away we go. So it looks like if we break this 7,000 here, guys, we're on our way to about 9,000, I would say. May not as well. That's always the risk of trading, isn't it? Hey, top John, look who's in the house. John Live, to the moon, to the moon. I'm just getting some breakfast, some caffeine into me top. So I'll get the energy level up a bit more. Get involved in these markets a bit more. And then I start to take the moon, take the moon. I'm already starting to pick it up. So. But yeah, interesting to see what's happening around the world today. And that's where big picture analysis. Look where the Nasdaq's sitting. Nasdaq's still hitting strong. Yeah. Actually, let's go to here. So silver's struggling still. I think silver's going to have another leg down soon. Gold's struggling, isn't it? It's like when last few days, those buyers are really, yeah. Yeah, I think we're going to have another leg down, actually. I'm just looking at, this is the silver and gold here. Then I'm looking at GDX here. We did rally up to close this gap just recently. And looking at the SIL, I actually think we're about to see another leg down in the miners. SIL to about $80, I would say. If I draw another trend line there, so that's the GDX. Yeah, I'm not sure with the GDX, but that line through there, the $80 on SIL. Gold as well. Because if gold breaks this angle, this to the upside, the next one is down 4,000. So if we break this low here, 4,600, we're going to 4,000. Silver looks like it's going to have another move down soon, again towards that 60,000 level, 50, 60,000 level there. Stock market's still looking pretty good. Nothing wrong with stock market. Still just holding strong here, actually. We're about to see a big move out of the stock market, I tell you what. Man, it's building up pressure. I think it's still holding strong. Nothing wrong, see? Beautiful upward trend, higher lows. Russell's very strong. Russell could be, once it starts to break above this IWM, at 300 level, 3,000 on the Russell there. And the stock market. Everything's looking really, really good. We are about to see a big move. We are about to see a big move. We are about to see a big move. And if any of you guys study the whole GAN stuff, you know these markets go through different phases, right? They'll go through what's called a price phase, which means just a movement phase. And then they'll go through these resting phases where the market doesn't do anything for a couple months. In this case, 5 months. When the market's doing this, it's not topping. Sometimes it is. But a lot of the times it's just pausing so it can rest, get a good night's sleep, go get a massage, maybe go on a little holiday, come back refreshed. Actually, that's not true, isn't it? You go on a holiday, you come back for worse most of the time. Like, I need a holiday from the holiday. It's like, I feel exhausted. But that's what's happening there. And this is the Nasdaq is a really good beauty. Look how sideways it is. This is called energy building. When the market's going strong to the upside, using a lot of energy, and this is still just building a lot of energy through here. It's just sideways, volatile, not really doing much. When we break, it's going to be huge. So we're on the verge of a really big move soon. Really big move. You know, I may be wrong. It may go down. Even if that does happen, I wouldn't want to be looking to short this market right now. No way. Because if that happens, that'll be a fake out. And then it'll go back up. So the end of the story is up. Why? Because the trend is still up. And it's at the moving average. So we just go with it, right? Just go with it. I'm going to bring up my if TMF goes up, let's go have a look here. I'll bring up the candlestick charts for your weekly to the left, daily to the right. If TMF goes up, does that mean interest rates up, please? No, opposite. Opposite. If you want to look at the interest rate, look, this is the 10-year. Look at the 10-year. So interest rates are interest rates. If TMF goes up, that means the interest rates are coming down. So if you want to check out the interest rate, just check out the interest rate. That's all. On TradingView, the code is US10Y, and this is the interest. Now, if you don't know what you're looking at on the chart, then that'd be hard to say. But you'll be able to see where the historical has been. Bullish, have I gotten to XLE yet? And then you also said waiting for a pullback. I'm waiting for a setup myself. I would never get into bullish. The worst thing to do is get into a market when it's already made a big move. So if it's been going up for a couple of weeks, especially for a month, and it's been just going straight up like XLE has, the worst thing to do is be trying to look for an entry signal up here. That's the worst thing to do. you know we're going to get a pullback soon. Yep. But you know what that requires, right, bullish? Something that most traders don't have, and it's one of the reasons why I know most of you guys right now won't be around 12 months from now, because it requires patience for that to happen, and not letting that urge, that FOMO, to get you in, because then a couple of months down the road, then you get a good entry signal. It's got to be patient. And a lot of people don't have that patience, right? A lot of people don't have that patience. And then that patience causes them to make an emotional decision. And that emotional decision generally is like the fear of missing out. But if they just understand that market go up, market go down, market go up, market go down. But to me, this is the first leg in a big bull market, like even on XOM. Now, some of my elite members that I have with my elite coaching group, they actually did take a trade back here when it started the breakout back here. They did take the breakout, and they just, yeah. I think Simon, one of my elite members, he made, I think it was like 500% return. He had 2 trades on XOM, actually, by the way, 2 trades, option trades, and he made 500% return on it. He's one of my elite members in the group, which is pretty awesome. Oh, we are always to the moon, just different symbol each time. Last time is SLV. Now my rotation to the other name. We're still to the moon. To the moon, to the moon. Let me bring on like the and see what can we see here. Yeah, everything's looking really strong. That's actually bullish. Actually, let's go back to the daily, weekly. We're still just holding it, aren't we? Nikai, if you watched my video, I'm not sure if you guys did watch my video I put up on YouTube yesterday, but I talked about what's happening in the S&P 500 now and the pattern that it's making. And I talked about this particular pattern here, meaning this pattern right here, as you can see, whenever we do get a channel, and this is the channel to the upside, and we break this channel and say, for example, to the upside, you measure from the high to the low of the channel and you project that up. And then that's the target of where the market could actually start to run to. So you have a channel. When it breaks, you measure from the high to low, you project it up. And as you can see, this is what happened with the Nikkei here. So if we go to, so if I show you this here, and I just draw this out right now, there's that there. Let me go clone. And then that's the channel there, right? We know that's the channel there in place. Cool. So what happens if the stock market breaks above it? It's the same thing, right? Then now we do what? We now draw a trend line from the high of the channel down to the bottom of the channel. So that's where we are right now. The if scenarios is this. If we do break up above here, then where's the S&P likely to run to? Based off the same pattern that forms, we have this area up here. Bada bing, that. And then therefore just above it is 9,000, which is a round number. So that's this whole 9,000 level is probably where the S&P is probably going to run to. I know that sounds crazy, but that's the pattern, right? The pattern gives you the probability of where things are likely to go to. And this is where we only can rely on that, right? So this is the exact same thing. The differences is with the stock market, though. Look at this, the stock market here. Spent a lot of time here doing nothing, really just going sideways for 5 months now. And that's, but if we go back to, say, for example, this chart here, which is just it's the same pattern, right? All markets make the same thing. Notice with this one here, with the Nikkei, the pattern, this one here actually ran up, but it didn't stop here. It stopped for a couple of weeks, but then broke up and then continued up. Why I'm saying that is that the reason why the S&P is more powerful if it does break up is because we've actually spent all this time here just going sideways. This is now resting, it's refueling. So we're spending a lot of time refueling here. So we could be getting ready for a big move. Big move. Actually, I believe we're on the verge of that. We start to break out of this channel to the upside and it starts to trigger. Oh, exactly like the image that I put up for this live stream today. Pain is coming for the shorts. Actually, there's been a lot of pain for the last 4 months for the shorts because, as you can see, every time we've had these drops, buyers come back in, drop. Every time you try to short it, once we start to break above here on this daily chart, bye, bye, Miss America, bye. Oh, my shady to my lady was drunk. And good old boys were drinking whiskey and wine, singing this'll be the day. No idea why I started singing that song, but anyway. Mark said, when the Japan unwinds its carry trade, what happens to the US rates? If I or anyone tells you what's going to happen, they're full of shit. No one knows really what's going to happen. We could spend hours looking at the possibilities, but the bottom line is no one really knows how that's going to work out. And if there's a big narrative and story around what is going to happen and what people are thinking and what the public is perceiving to likely to happen, do the opposite, because that's going to happen. I believe I was following your method when getting positions in back and GERN. Can you show how you decide when to get out? Well, I have an entry signal first off. So the trade selection is the first thing that I use. So you got to get into a good trade. You don't just use a random get in, and then like the exit that I use for my trading rules is based off my trading setup that I use. So I have a couple of techniques that I'm always utilizing in the markets to see what's actually going on in the market there. So the exit that I use on my trading setups is based off my entry signal on my trading setup. They go hand in hand together. Yeah, GERN. I'm not sure when was that. That must have been a long time ago. Huh, interesting, eh? What is the time? The time is 2 o'clock. Oh, well, 6 o'clock in the morning for me. Copper. And good old boys are drinking whiskey and let's go have a look at copper. My analysis on copper. Very strong. Why? We want to keep the analysis really simple, right, guys? Firstly, we're actually in a very strong trending environment on this weekly chart. So weekly chart, rule number one is what is the trend of that market? We're up. Very strong trending all through here. And we're well above this 24 moving average. So there's a lot of, it's been doing that now for many months, and we're well above the moving average. That tells you we're in a very strong trending environment. Second thing is that we start to see the moving average is actually starting to point up. The moving average was flat through here, and now we're starting to, as you can see, the angle of this move here, we were flat through a little bit through here, and now the last sort of couple of months, we've actually started to increase through there. This is momentum now starting to show there's a lot more momentum to the upside. Breaking through resistance, holding through there, it's looking strong. Now it's just pausing right now, just refueling, that's all, which means this pause is just that. It's a refueling phase to go for the next move. So what's probably likely to come soon? When it's ready to go for its next move. And what that simply means is we go through these phases. It has a big move up for a while, a couple of months, and then it'll stop. It'll just go sideways. And typically when that happens, it's just getting ready to go for another move. And then when it's ready, it'll probably break up. If we break down, we're probably going to go through a bit of a false breakout to the downside, and then it'll probably rally back up again. But that big weekly chart is always king. And looking at that big on the big long-term weekly chart there, singing whiskey and wine. So that's where it's at right now, eh? Right through there somewhere. I could also make a case for that level through there. Yeah. So everything's looking bullish. A lot of red across the screen today. Netflix. Oh, Netflix has been getting crushed, hasn't it? Microsoft down again today. Adobe. So much for that AI story, right, guys? It's all the same thing, guys, isn't it? There's always a new story. And the interesting thing you'll find about the market is there's always a new story. Meaning it's the AI, it's the Bitcoin, it's silver gold, and 6 months from now it's something else. But these markets are getting crushed. NVIDIA. NVIDIA is actually the strongest one, isn't it? Yeah, we're probably going to go for another move to the upside soon with NVIDIA. Yeah, we're probably going to have another big move to the upside in the video. Look at all this sideways movement. Now, what a lot of people would look at first, they'll be saying, but John, don't you see? It's a big head and shoulder formation. It's going to go down. And then it does that on you. Why? Because you're looking at reversal patterns. Don't look at reversal patterns. Most of these don't turn into reversal patterns. Most of these turn into continuation patterns. Don't look at reversal patterns. Go with the market. Reversal patterns. Oh, but John, it's a double top as well too. It's going to go down. Don't. No reversal patterns. If we're trending up and the moving average is going up still, there's a trend to the upside. Go with that, not these reversal patterns. Because most of the time the reversal patterns do not work. It creates a low win-loss ratio. It creates a lot of heartache. Don't do it. And this is where those traders who are trading that type of trading will always blow their account up. Guaranteed. Double tops, heads and shoulders, divergences patterns. Because the nature of looking at a reversal pattern is mean you're going against the market. And we know most of the time when the market's in a strong trending environment, it's going to continue. And then every now and then it doesn't. So do you want to trade the most of the time, or do you want to trade the every now and then? We'd have to make life hard for ourselves, right? But I guess if some of you guys only been trading, I say the market, say less than 5 years for some of you guys, then I would understand. You're going through the discovery phase. You're still trying to learn about these markets. I've been trading the markets for 20 years myself, so actually over 20 years now. So it took me a long time to figure that game out. Through a lot of pain. Google's rolling over. Yep. Google's now peaked out, a short-term peak anyway. We're getting ready for a lot more downside to come. But the downside is a pullback. We're in a very big, strong trending environment with very little pullbacks. So we're probably going to have a move on the downside soon. Which is just a pullback. AER. Oh, look at that thing still go. Where are we here? Connor's still going. Where's Owen? Oh, when you were in the room, mate? By learning options. Cool. Cool. Just remember, TT3, remember, right? For your longevity in the markets, the foundation to your success is this one simple thing, okay? Actually, two simple things. Doesn't matter what you're doing, two simple things is gonna give you the best chances of you actually being part of the 1%. I say 1%. 1%, only 1% of traders actually make good money every single year. The less than 1%, they may have sporadic success, but not continued success. And here's the two big things. Firstly, every time you get into a trade, what's my risk here? Get the risk at a bay. And TT3, you've been following me long enough now, you know exactly how I do that, right? By utilizing what I do with the options there. Now, this is trading wise, not investment. Investments is a different type of approach there. But then secondly, we need the ability to be able to have these big profits every now and then. That means out of all your successful trades, at least 20% of them need to be really big profits. So we need to have the ability to have these big profits and then those small losses. And if 20% of those, all your successful trades can be really big profits, you're going to have a really good year. And if you have that as your foundational approach of going into the year, you're going to crush it every single year. Even if you had a horrible win-loss ratio, 50-50 win-loss ratio, you absolutely just sucked with your rate. Oh my goodness, I took a lot of losing trades. I promise you do that, you're going to have another, you'll have another successful profit. You'll have a profitable, successful year. Because that's the foundational thinking you should go into your lay of the land of having a good year. What I saw awesome. And TT3, it just makes sense, right? It just makes sense. The thing about trading is, yeah, well, I guess the nature of trading is most people are big gamblers in these markets. I spoke to someone yesterday. You might be watching this live stream right now. I'm not sure if you are, but big, massive gambler. He's doing credit spreads here. He's doing this over here. He's buying this company here. He's doing this over here. Big, massive gambler. And he's wondered why he hasn't been successful in the markets. You need a good foundation. And that's why it takes a lot of time. That's where most of you guys, and I know most of you guys are not making money right now. I know that. It's hard. It's not an easy process. And anyone says that if you go to getjohntop.com, that's where you can book a free call with me. That used to be an application for my coaching program, but it's closed right now. But you still can book a free call with me if you want, and I'll see if I can help you out there. But even on that there, right, it's like it takes so much to do really well as a trader. It's not an overnight easy thing. And that's where most people just don't do really well. Oh, look at that. That's strong, isn't it? Look at that. This is strong. Nice big move up. Nice pullback. Moving average is coming up. We are about to blow up. What I saw you show in crash style video, do you see in PLT similar to lower low, lower high, and 24 MA turned down? For an example, only not for a trade. Top spin. Top spin in the house. Let's go look at that one, eh? PLT. Yes, we're definitely rolling over. Yes. But we're not there yet though. Okay, let me explain what I mean here. If I look at the trend of the overall what's happening here on both my charts, you are right. So what's probably going to happen to Palantir? Can't even say the word. PLTR. There you go. Is we've had this very big move to the upside. Very, very, very big move to the upside. We've now had this. This is where you call this a head and shoulder formation. After a big move, they do work. Now, but here's the thing though. We have just broken down now. So we are now no longer in an upward trend after all this time. So what's probably going to happen here, top spin, mate, is this. We can see if you look at even just if I look at my daily charts, you know, I'll even go the weekly chart here. So this is the weekly chart here. So if we do get this moving average coming down here through here somewhere like that, let's make you green. And then if we get something like this going on and then we roll over, then that would be, then we're probably going to see a lot more selling on the downside. We've just started to break that in that market there. So yes, you are right. We actually are starting to create a big top in here. So you said it created a lower low and a lower high. It didn't create a lower low, but it did create a lower high, and now it's creating a lower high, a lower low. So you are right there. Good job, man. Good job. I can see what you're looking at there. So if I read the trend properly, it went up, it went down, it went up, it went down, it went up, it went down, it went up, and then it went down. So as you can see here, that it was a low through there. And then it made another higher low through here. And now it's making a lower low, but actually made a lower high here. So now the trend is over. This big bull market that it's been in since forever, ever since 2023, higher lows, higher lows, higher lows all the way up. So ever since 2023, we've been in this big bullish environment through here. Now we're on this downward phase, I would say. Possible retracements would be a 50% of the entire move. So that level through there, I would say. So for a trading wise, even for me, top spin, and good job, mate. Really good job. I'm really proud of you, man. You're seeing this really clearly. Hey, wait. Do that again. PLTR. There we go. So what I would be looking for myself, knowing where we are right now in the weekly charts, it doesn't mean we're going to get a real big drop really fast. But what it does mean now is what I'll be looking for. If we got something like this, top spin, meaning firstly, actually, I'm not sure top spin if you're still around, but you would know the stuff that you follow with me. If you look at my stuff, I'm looking for an L-shaped trading pattern to a strong moving average. So firstly, this is the 52. 52 is coming down through to here. If we get that. Secondly, if the market then suddenly does this here, like all that through there, boom. And then suddenly we get like that. There's a high probability if we got this here, which is, I call it my L-shaped trading pattern, which is down and across. That's the L shape. Let's make it red or whatever. The L-shaped pattern to a strong moving average. If we get that set up and then we get the breakdown bar, that's the trigger to say that now we're likely to see, and I'll make that red. Oh, I'll make it black again. we're likely to see at least another leg to the downside here. And we never know how big the leg's going to be. But if we get this set up here, L-shaped pattern to a strong moving average, and then the breakdown bar. Now it may come back up a bit and retrace and then come back down. But that's what I'd be looking for a really good trading setup. I just basically told you my trading setup. It's really simple. It's actually not that difficult. Some make money, some don't. And then you manage it. So, hey. But Palantir is definitely, the move is over now with Palantir. We now have topped out and we are now breaking down. And we talk about reversal patterns, about heads and shoulders. We've now got a confirmed head and shoulder, which means just by looking at this level here, we should start to make our way down to this level here. So Palantir could be setting up for a real good short opportunity. While the stock market goes to the moon. Very nice, Palantir, eh? Very, very, very nice. Palantir. Let's go back to, oh my goodness, hey. The stock market is about to make a big move. What's my thumbnail say? Pain is coming for the shorts. Pain is coming for the shorts. Dun, dun, dun. We are on the verge of a really big move. The pressure is building like an Elon Musk rocket ship. My goodness. Oh. Telling you right now, guys, this is going to make a really big move soon. Now, when I say big move, it's not straight up every day, right? That I understand the concept of that there, but I think we're about to see a good 5 months or so of really strong movement coming soon. And even the Dow Jones, right? This is the Dow Jones here. You know, the interesting thing is, traders, is the further you get into your trading career, the more you start to look at charts like this. You start to realize about the truth about trading and the truth about these indicators out there and all that sort of stuff. And you realize most of them are just a waste of time. They're not really going to help you see the big picture, see what's happening, see where the overall momentum is, see what's really going on. A lot of those indicators on these platforms are completely waste of time. I know. I used to trade like this. This is how I used to trade, by the way. What you're looking at right now. Looks pretty funky, doesn't it? Hey? Doing this here always stopped me from getting big profits because it always get me out early. You guys have been there before, right? You might be in a long position or a call option and the market's going up and then suddenly the stochastic gets into the overbought. You think it's going to reverse and then you get out and the thing just keeps going. So I used to trade like this. I keep this here to teach you guys what I used to trade. Now they are useful every now and then, but now most of my time I'm looking at a chart like this because this is the big picture. This is what the true story is telling me. And then I'll go to the daily charts to see some entry signals and stuff like that. Yeah, Alex, mate, you're so right. But yeah, like you're exactly right. This is the S&P. And it is at the top of the channel. You are right. And this is where they're going to be solely mistaken. Because if we do, and it looks like we're about to, once we start to really break above that 7,000 level on here, we're on our way up to probably around that 9,000 level. 8.5 to 9,000 level, somewhere there. That's where we're probably going to go to. And the thing is, Alex, two major things that's kept me on the bullish side. And I'm not sure how long you sort of keep an eye on the stuff that I put out there on the good old YouTube lands, but you would know at least for the last 4 or 5 months now, or especially, well, to be exact, when we had this drop down the bottom here, I bought call options on the S&P 500. I'm still in my call options now. Just being patient, let the thing go. I am a trader of big profits, not lots of trades. And I do know that two things, the trend is still going up, so I can't go against that. There's a trend and momentum still to the upside here, even though we are at the top of the channel. But then secondly, exactly what you just said there, right? Like I do know that the sentiment that the sentiment right now, even though we're at all-time new highs, is bearish. So those two things gives me confidence one, the overall momentum is still to the upside, even though we're getting these short-term little drops in the market these last couple of months. And it hasn't been doing much really. But we're still very strong to the upside. How do I know? Bring up your weekly chart, take everything off. And if we are very strong trending in a direction and it's above the moving average, there's a very strong trend through there. Then if the moving average has been trending up for many, many months on this weekly chart, that's called momentum. Now we have trend through here. There's a very good strong trend and there's a very good strong momentum here. And as you can see through past history, whenever we go through, if it's above the moving average and we're doing this, most of the time it'll bounce off it, bounce off it, bounce off it, bounce off it. If the moving average is going up and we're above the moving average, massive probability we're just going to continue this move, continue the move. So there's a trend in the market here. It's above the moving average, bouncing off it, bouncing off it, bouncing off it, bouncing off it. That's a very strong trend market. Yeah, we do go through these sideways periods through here, which is, again, this is a weekly chart. So that's a month through there, a month through here, and so on and so forth. And then if the moving average is going up, that's a lot of momentum behind that. So not only do we have a good, strong trending environment, which means most of the time it's going to continue, but then the moving average has got a lot of momentum behind there. So that alone, and then I bring on the sentiment of where we are right now. And the sentiment is like, it's still looking for downside. So those two things has made me very, very, very comfortable with being long. One, because the market most of the time will continue the trend. And then every now and then we won't. Every now and then we'll start to top out and we'll start to go a bit of a downtrend. And I'll know what to look for from there. So that's why I'm very, very happy still being long this market. And again, once again, when we this down the bottom here, fear and greed index got down to the extreme fear. Oh my goodness! But you gotta give these things time, right? So I bought a June option myself on the SPY. So you got to give these things time. And these short-term little drops here, drop little here, drop, drop, drop. It's just part of the market there. Don't be so freaked out by short-term drops. Because these short-term little drops here is what gets people in trouble, right? Because they emotionally get drawn to, oh, did you see what happened today? And then, woof. The big thing is the big picture. The big thing is the big picture. There you go. And typically, this is why I like to look at a chart like this here. White background, black bars, weekly charts, gives me the big view. And I can see what's going on there. Yet people are afraid because they're aware of the economy. A wall of worry. It's sort of the same for myself. I'm afraid to mix bull markets for brains, so I keep myself to the stuff I understand and smaller positions. Yeah, it's interesting, isn't it? But the economy is not the stock market, right? The economy is not the stock market. The stock market will start to roll over first before we start to go into a recession. Case in point, when did the whole Lehman Brothers big bang thing happen? 2008, right? But let's look at this here. Let's keep this really simple here. Let's go back to 2008 here. The big bang of the Lehman collapse came down the bottom here. This is where it happened right here. That's the whole, oh my goodness, banking collapse. But look what happened beforehand. We spent all this time developing these highs up here. You know, look at this here. And then there's another high there. We started going down first, right? We started topping out through here first. And then we went into recession in the second half of 2008. That's when we went into the recession there. The recession didn't start up here. This was actually so the market will slowly go down first, and then we'll start to get and then the momentum picks up. meaning momentum picks up on the downside. So the really big, fast corrections generally come from that level through there. Unless we get two big, fast drops in the markets come from when we're already in a downward movement. So if you even look at, say, September the 11th, right? Big, bad stock market crash because of what we know of September the 11th. But right there, this here is September the 11th, right there. One, it was the bottom. But look where we were. We're already in a big downward trending through here. So the nature of that is that if we are going to go through some sort of recessionary period, the market will start to slowly roll over first, and will start to give us some major, look at this here. So it created, this one here started creating a massive top in 2007. All this bit through here was 2007. So the stock market will generally spend a bit of time doing this topping pattern here first, up and down like 2007. And then as you can see, then 2008, we started to go down. And then it wasn't until the second half of 2008, we had the Big Bang. And then the Big Bang Theory and, the banking collapse and so on and so forth. So the market will start to give us a topping pattern first, well ahead before we start to get the actual recessionary signs. So until that happens, you can't try to predict the top. You can't try and predict the top. Because look at this back here. Case in point, Alex, is as you can see, right? Look at this here. The case in point is, look at all through here. Higher low. Look at all these. We had these drops, but look at this here. Higher lows, higher lows, higher lows, higher lows, higher lows, higher lows all the way up. And it wasn't until we started to create this topping pattern up here, which all that simply means is we actually created a lower high through here, and then we started breaking down. So we're no longer in this upward trending phase through here. This upward trending phase came to an end here, and then we started to go through a downtrending phase, and then we started that. Until we get something like this going on in the stock market, we're not even topping out in the stock market. It's just pausing. And every time we go through these bits through here, and these bits through here, and these bits through here, when the market just goes sideways here for a good 6 months, they think the top's in the market, and it just keeps going up and up and up and up. And it's not until the market tops. So again, the market will top first, and the market doesn't just top right now, then go straight down. That's where people are shorting for a big crash right now. It's like, do you understand what you've been trading? Look at the truth. So that's all. We just got to understand what's likely to happen. So if we're going to refer this to another 2008, okay, cool. It took a good 6 months for it to form the top first. Then we started going down first, right? But even in this downward environment, guess what? Look at this here. From that there to that there, that whole move up there was 2 months. We had a 2-month rally here. 2 months. But it's we're now down trending, right? And then boom, we go down, 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 down. So even in these downward environments, and I think a lot of people think in their mind, we're going to see this thing just completely fall off like that through there. And it just doesn't happen. The market will start to give us clues. And as you can see, right, you start to get this, big picture analysis start to go in, you start to change, right? You start to go from this big upward trending environment. We start to form a top, and that slowly goes down, right? That's what's going to happen to the stock market. The stock market's not just going to go down like silver. The reason why silver had a really big fast drop really quickly is because that's called bubble territory, right? Because it just went too vertical too fast. And again, that's what silver does, by the way. So we can't think that the same thing is going to happen in the stock market right now. Because if we do, we're going to be sorely mistaken. So that through there. And then this Lehman Brothers collapse happened. So if we go to where we are right now, there's not even a topping formation here. There's nothing. Like, absolutely nothing. And again, if we're actually looking for some sort of topping formation here, check this out. This here was a bullish leg through here. This here, we actually had this moving up through here, and then we went steeper, right? Look at that through there. So it's called bullish legs, right? And in fact, as you can see, look at that through there. This is the S&P right now. So bullish legs, we break, we start to go down, then we start to go down through here. And then we break this downward phase, then we go back into an upward trend. Now look at this upward phase, we break it. Now look where we are right now. There's nothing wrong with this. And due to the nature of what people think is going to come, so there's not even and people trying to look for a top right now in the stock market. There's not even a warning sign of the top going to be in. So therefore, play with the bull. What I've learned from you is you can do good things with options in the right conditions. I remember your gold trade you did so much more with less and never had to make leaps of faith. Yep, economy and stock markets are different. Yep, yeah, true. Market gives us a signal. Yep, I guess I need to live through one of the good deleveraging to experience before. We don't have to live through it, right, Alex? You can always go back in time, right? Like, for example, Alex, right? I was around trading the 2008 crash. Now, call it a crash. It's just a bear market, really. At the end of the day, that's all it really is. 2008 stock market crash was just a bear market. It went from a bull market, and then it went into a bear market. But they call it a crash. But as soon as we label it as a crash, we automatically think big red down bar, down 30% like silver. No, it's not going to happen. But it's just a bear market, that's all. Because look at this here. Top, down, up for a few months, then down, then up. Like that's lower high, and then the big bang comes. So that's all it really is. Just give me a sec, guys. What's the time? What is the time? Almost 3 o'clock. Oh, stock market time anyway. So Alex, I'm not sure if it's still around, but just go back in time. That's all. You don't have to live through it. Just go back in time and see what the actual chart was actually telling you, what was actually happening back there, and then you'll be able to see. That's why I like to look at the big picture and go back at these times. To actually, then, yeah. And by the way, Alex, a deleveraging, and if you look at things like a default, right? The default sounds really bad. Oh my goodness, the government's going to default on their debt, and the stock market goes up if that happens. It's the same thing, really. At the end of the day, it's all the same thing. Oh my goodness, we are on the verge of having a big move, guys. I'm telling you what. You just see it. Now, I don't know for sure, but the thing for me is if we can start to see, like, if we get a 7,100 print out of the markets, that'll be a clear break above that 7,000 level. Bring on the 9,000 when that happens. And then probably within the next 6 months, we'll start to see these things start to rise into that 9,000 level. So strong. Fortunes are going to be made. Fortunes are going to be made. And that Ethereum, eh? There's blood in the streets. Blood in the streets with the crypto market, I mean. Rates are about to get crushed. Yeah, I think so. I think so, Alex. I think there's not enough fear in the marketplace. There's a pain in the marketplace, but there's not enough fear in the marketplace. And if I bring up my, let me bring up my PowerPoint. Where is it? Right here. So if I look at where we are on this, because the sentiment really drives this, right? Reason why gold and silver had a really big drop is because there's just too much euphoria. That's all. Um, Plain and simple. If I look at the crypto market now, I would say we're probably in this denial phase. So around about this denial phase, I would say. So I think we have a bit more downside, another big leg coming in those markets. Gold and silver. It's hard to say with the gold and silver in the mining sector. Maybe complacency. So metals is probably still up here or at these levels through here, even though we had that drop. Cryptos is probably around this denial phase, I would say, as they've been coming down this last, what is that, 6 months or so now? So denial. Stock market, disbelief. Like I'm still seeing so much disbelief around this rally. We get a few percent drop in the markets, and then suddenly like fear and greed index just goes straight to fear, and it's like a few percent from all-time new highs. So there's so much fuel. If you look at this top up here, that's all it does, right? Up and down, up and down, up and down. And that's why trading or even investing in the markets is so difficult for most people. You got to live through that a few times, meaning you got to live through when you get a lot of fear. It's hard for the average person to be buying at that time, but that's the best time to be buying, because then, just like everything, right? There's a big pendulum from all markets. The pendulum is, oh my goodness, this is so good. AI stocks, then it becomes so bad. Oh my goodness, this is so good. Crypto market, where we can never lose. Oh my goodness, crypto market. Oh my goodness, it's so good. Bitcoin to the moon. There's only 21 million. This time's different. Blah 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 blah. The pendulum's going to swing the other way eventually. Oh my goodness, this is so bad. Meaning the market will go down. Gold, silver mining stocks. Oh my goodness, this is so good. And then it becomes and then eventually down the road, then it becomes so bad. Meaning we get a much more significant drop out of the metals and miners. And this is the pendulum, right? This is history speaking to you. It's different markets, but the same thing. Stock market pendulum's still on the so bad level, even though we're at highs, it's like crazy. We're not getting that euphoria right now in the stock market. So tops are not made when people are worried about a top. Tops are made when they're like silver a month ago or a few weeks ago, and gold. Now, I'm not calling for a major top out of the mining sector, but even for a short-term top, that's when tops are made, right? Tops are when there's a overwhelming herd, and here we go, look at it, it's going, oh my goodness. And then you got YouTube's coming out calling crazy projections, and people coming out with saying silver's going to $400 right now, and the headlines and the media's talking about it, and it's going to the moon, and people are talking about it. Oh my goodness, it's never, and this time is different. And then boom. The pendulum swings back the other way, right? For silver, it's swaying back the other way in one day. And this is what sentiments do, right, guys? This is where like you look for, and this is where, guys, like where the one market down the bottom here is what? The one market down the bottom here is the bond market right now. So I don't know when we're going to swing back the other way, meaning the pendulum always swings. Can I feel this? No, Phil. And let me just make this like a red, right? So red. This here is the bond market right now. That's why I'm so happy to investing in the bond market, because I know where the pendulum is. It's all the same thing, guys, right? Different market, different, it's all the same pattern. Pendulum, pendulum, pendulum. And then my job as a coach is to try to present this to you. So, oh, that actually makes sense. I can see what he's saying there. 12 months ago, it was the AI stocks. So, the stock market's going up because of the AI, and the AI, the 7 stocks are dragging the stock market up. Then the pendulum swings back the other way. And then AI stocks do really bad for a while. Oh my goodness, Bitcoin to the moon. Bitcoin 123,000. It's going to keep going up. When now back in the banana section, I'm going to go to the moon, and this time's different, and Bitcoin to the moon. It's never going to go down. And then the pendulum swings back the other way. Gold, silver, oh my goodness, and then boom, then it swings back the other way. So for me, understanding the pendulum, where the pendulum is, I want to be, especially buy and hold for like a couple of years at least, on a bare minimum. I want to be putting my money in where it's like the pendulum back down to the anger, like it's bad. Oh my goodness. And that's the bond market right now. That's TLT. That's TMF. Like there's these markets out there where people are just like, are you an idiot, John? Like you don't understand. And then the pendulum, because the pendulum is really bad, by default, a lot of people are going to say they disagree with you. That's cool. That's why 90% of people don't make money from markets, because they go where the pendulum is, not where the pendulum is going. Most people lose money in the markets because they're going where the pendulum is, not where it's going. Simply means if there's a lot of fear in the marketplace, they go with that fear. But that fear eventually turns into what? Then greed. Just look at gold as an example. Back in 2020, 2021 or 2020 to 2023, people didn't like gold. Gold wasn't on their radar. The pendulum was what? You're an idiot for owning gold. What are you owning gold for? That was the pendulum, right? Then what happens a couple of years later? It swings back the other way. Now everyone's about gold. Same with the bond market. I'm in it right now, the bond market, TLT, TMF. Everyone's saying you're an idiot for being there. But I was an investor in gold and the mining sector back in 2020 through to 2023. Every year I was adding more positions to that. And I got called an idiot and blah, 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 blah. You should be in Bitcoin and cryptocurrencies and all that sort of stuff. The hypermania. But I knew eventually the pendulum's going to swing back the other way. And here we are 2 years later, and I'm making an absolute fortune from my investments because I'm long the metals and miners right now, and I will be for another 5+ years. Even though we're going to go through another big correction soon out of that, and I do believe that in the metals and miners, I'm still a long-term investor in that. Oh, right? And so for me, if I'm looking for new opportunities now, I'm looking for the pendulum to be a one way, the fear way. So that one way right now, out of all the markets, is the bond market. Now, again, I'm not trying to call bottom right now in the bond market. It may not bottom right now. But I do know over the next 2 years, if I give it that time frame, within that 2-year time frame, we're going to see a really big bond rally. And then everyone, guess what? Then the pendulum's going to swing the other way. And instead of it being the most hated market, you're an idiot. Don't you understand, John? They're dumping treasuries right now. They're dropping the bond market. Everyone's dropping the dollar, John. You don't understand. Like it's the end of the road. Blah, 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 blah. That's the story you're going to hear about that. That's the time to get involved with that. Because then the pendulum's going to swing the other way, just like it does through history. And then everyone's going to be talking about the bond market in the next 1 to 2 years as it starts to rally. Oh my goodness, the bond market's getting a bid right now. You see what's up in the bond market. Interest rates are coming down. Oh, what's that mean? And then there's going to be a lot of hype around, oh, TLT is making a move. And it's just the pendulum, guys. Nothing new, right? Nothing new. So for me, even for the stock market right now, we're nowhere near the highs. To me, if I'm looking at the stock market and I'm trying to use my good red box for the stock market, I would have to say that the way that I'm hearing the noises is down through here somewhere. Disbelief, maybe hope, definitely not optimism. So why am I bullish the stock market? Let me see. That's all it is, guys. Everything goes through the pendulum, right? There's a pendulum from everything. And most people are going where the pendulum is, not where it's going. And if we understand that it goes from most hated to most loved, most hated to most loved, gold 2-3 years ago was the most hated. What are you involved with gold for? It's the stock market. It's the cryptocurrencies. It's Bitcoin. It's that's. And then suddenly the pendulum swings. The most loved, which was cryptocurrencies and Bitcoin, and that was the mania, now becomes, the pendulum swings back the other way, and we get a big pullback. And then the market that was most hated, or didn't people just bagging on gold? Oh, you're in gold, right? Why in gold for? We should be in Bitcoin. You're an idiot for doing that. That's doing nothing. That's going nowhere. And then 2 years later, now the pendulum swings back the other way, and then everyone's like about, oh my goodness, oh yeah, you should be in gold. Why aren't you in gold? You're an idiot for not being gold. and then do. This is what happens. And that's all that happens, guys. It's really, really simple, right? So I did a short the other day, and I said this: if your thoughts and your position is in a way where there's a lot of videos on YouTube and the media is talking about the way they're talking is in agreement with what you're doing, be very worried. Now, most people wouldn't take that. Most people don't understand the markets and what I just said there. What do? Most people will take for example, I am long this market right now, and there's all this talk around bullishness around this market here, and there's media talking about it, and they're all in agreement with what I'm saying here. That makes them feel good, like, oh yeah, everyone agrees with me. Oh yes, I'm in the right place, and then they lose money. When you say bond market, would SPY QQQ also move up with the bond market? Maybe. I don't know. I take Immortal. Take each market on its own merits. I don't know why people do this. If the bond market goes up, what's going to happen? Don't take the stock market now. SPY. Let's do some analysis on SPY. Let's look at the chart. Cool. Let's look at the trends and so on and so forth. Then let's look at the sentiment around the stock market right now. Then make a conclusion on the stock market. That's it. If we start to say, well, if TLT does this, then we don't know. We just make up some story. It's just useless opinions about doing that. Then if we want to look at the TLT, the bond market, now let's look at the bond market. See what's going on there. Where's the sentiment? What's been going on? Oh, okay. Now we get to go. Now make a decision on the bond market. I'm not sure why people do this, but there's these correlation trades, right? They're trying to, well, if the bond market does this, what's going to happen to the stock market? I don't know. No one does. And if anyone does tell you, they're full of shit. It's just an opinion. No one knows idea. So you can't make a decision on that. But what I can do is I can go to the stock market, the SPY and the overall markets, and I can see what the market's doing right now and all that sort of stuff. And then I can see where the sentiment is, which is still the worst economy in the world and all that sort of stuff. And then, what's the time? Oh, I've got to go soon. And just all that sort of stuff, guys. So whenever I'm doing my analysis on the stock market, like SPY, I'm doing my analysis on it, looking at the charts, looking at the trends. And then from like, if it's more like a bit more of a longer term trade, I'm looking at the sentiment. Where's the sentiment right now in the stock market? That's it. I'm doing it all around the markets there. I'm not sure why. There's a big thing about doing these, what's called correlation trades. Well, the dollar's definitely going to go down, so I'm going to go buy gold. You are an idiot. Who said the dollar's definitely going to go down? And if the dollar goes down, does that mean gold can't go down? It was like, people just make life hard for themselves. I don't know why. Don't. If you want to analyze the stock market, analyze the stock market. You want to analyze gold, analyze gold. And then they wonder why they get stuck. Mining will be interesting depending on the contract. Silver. Any good chance there will be some buy the ribbon, sell the news out there? Oh, maybe Alex. Maybe. Well, anyway, guys, that's the end of this live stream. We're hopping on for an hour and 40 minutes. That's the end of this live stream. For you guys on the YouTube replay, if you did watch this entire way through, I hope some of this stuff that I've talked about. My goal is just to do these live streams here. It's just to really help you guys with some of the things that, again, it's taken me 20 years to figure out, right? So it's taken me a long time, multiple decades in these markets of doing this really bad thinking, wrong approaches, wrong understandings, taking the wrong decisions. And so the stories like today hopefully gives you some understandings of, okay. Yeah. So anyway, guys, that's it for me today. I've got to head over to my elite group. So I've got to end this. I've got to end the live stream. So anyway, guys, speak to you soon.